Our economy and markets have been in crisis mode for the last 2 years. I mean, we've seen everything from stock market crashes to inflation hit a new 40-year high. That has left investors wondering what they can actually invest in that's going to make them money and protect against all of these crashes. Well, a ton of investors have turned to commodities and cryptocurrencies like Bitcoin. And physical commodities like gold have been booming over the last 2 years. Gold is one of those commodities. I mean, gold has gone from a value of around $1,400 per ounce all the way up to well over $2,000 per ounce during this pandemic, so over the last 2 years. Now, since kind of the middle part of 2021, gold has been pretty flat. It's been sticking around the $1,700 to $1,800 range. But according to some experts, that could change very soon, and we could actually see a new record high for gold sometime in 2022. In fact, gold could reach around $2,100 per ounce this year. So today I want to take a minute to kind of address these predictions that experts are having about gold, why they think that gold will reach new record highs, and what exactly that will mean for our commodity market. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. So like I said, gold has been pretty steady lately, but it's been gaining in value for around 2 years now. And the reason for that is all related to our pandemic. More specifically though, these experts are saying that gold is going to hit a new record high because of inflation and the value of our dollar starting to go down. Basically, right now we have kind of the perfect storm for a potential recession and stock market crash in 2022. It really all depends on what goes on with the pandemic and inflation and how the Federal Reserve decides to combat both of those two things. Let's address inflation first here, because inflation is something that has been on pretty much every American's minds since about the middle of 2021. And for the year of 2021, the latest CPI numbers show that inflation rose at a rate of around 7%. That's the highest we've seen in 40 years. Now, what that means is that the average prices in just about every industry in our country are going up on average about 7%. And again, that's just an average. So some industries are going to show much higher than 7%, and some industries are actually going to drop below that 7% mark. And even if you look at core inflation, which excludes food and energy prices, inflation still went up by around 5.5%. That's the highest we've seen since 1992. But what does that really mean, and why is gold getting more valuable right now? Well, when we see inflation go up, that means that everyday Americans or investors have to start paying more for all of the same things. That's because the value of your dollars and buying power starts to decrease as you have more money in an economy. Printing money in itself doesn't really do much. It's when people start going out and spending all of this money that is what causes inflation, because prices are ultimately going to have to go up because now people have a lot more money to spend. They're going out and buying a lot more things. There is a demand for money. There is a demand for just about everything in our economy, and that means more money printing by the Federal Reserve. The definition of inflation just means when your monetary supply starts to go up. That means the Federal Reserve is printing more. Symptoms of inflation include prices going up throughout our society. The reason for that is because when people start buying more, that signals to companies that they need to produce more. And every time they need to produce more and more products or services, that comes at a cost of hiring new workers and building new factories. That's all just to keep up with supply, because if Americans end up going to the store and they can't buy anything, well, that means that it's not that they don't want to buy things, it's that they can't buy anything. And they're naturally going to stop spending as much money. They're naturally going to start saving money. That is bad for our economy because the businesses that are currently employing people are losing money, because even though they're supplying things, they're running out of things very quickly and they can't afford to keep their workers. Ultimately, you need people to spend, and people have been spending a lot of money recently because of the Federal Reserve and our pandemic. You see, when the pandemic started back in March of 2020, basically everything closed down. Economic lockdowns made things very difficult to buy things, and it made things very difficult for people to work. Businesses starting to shut down is not good for our economy. That means people can't buy things because supply is very low, and businesses can't make anything because they're just not open. Nobody is going to be getting any money because the businesses are closed, they can't pay their employees, and then nobody can buy anything because they don't have a job, so businesses can't get paid either. So our supply chains were massively disrupted, and they were disrupted for several months in 2020 and in parts of 2021. All of that backlog is creating a lot of supply chain issues that we are still facing today. Not to mention, when Wall Street found out that all of this was going to happen, the stock market saw one of its fastest crashes in its history. With the potential of no businesses bringing in a profit, well, that means any stock that is publicly traded is going to lose money, and investors wanted to pull all of their profits now before they started losing. Enter commodities like gold and Bitcoin. So people start investing in gold when we have times of crashes because gold is considered to be a hedge against inflation, market crashes, recessions, you name it. It's a hedge because even though investors are losing money on Wall Street or the real estate market starts to go down, gold is still going to be a sought after asset, and it has universal value. You can get the same amount of money anywhere in the world for an ounce of gold. That's because everybody wants it. Gold is something that's finite too. I mean, we only have so much gold on the planet. And in addition, it needs to be physically created. So people need to go out and mine gold. It takes time and money to do that. Versus our US dollars that can be printed whenever the Federal Reserve and the Treasury Department decides that they need more money. If the US government and the Federal Reserve decides that it needs $5 trillion today, then they can go out and print $5 trillion. But you can't come up with that kind of gold right away. It takes time and energy to create gold. That is exactly why we've seen the rise of gold over the last 2 years. Investors started putting their money into this asset because it is a commodity and it can be traded anywhere in the world for whatever that nation's currency is, and it's going to give you a ton of money. You can then use that money without fear of actually losing it on the stock market or in another asset. But as inflation has steadily started to rise, gold has rose with it, and investors right now are kind of looking at our current inflation crisis and wondering if they should put more money into gold. If inflation continues to rise, then that means the value of the US dollar is going down. Because so many people have so much money, that means there is a ton of money in circulation and everybody has it. Demand is going to go down for the US dollar if everybody has a ton of US dollars. And if that happens very quickly, then people are going to turn to different assets, an asset like gold. In addition, a lot of experts are talking about geopolitical reasons that could bring up the value of gold in 2022. There is a lot going on in our world right now, especially with the Russia and Ukraine situation, that could potentially bring gold to a new record high. And this happens with economies and world governments all the time. When people start getting scared that an economy or a country is going to start crashing, and they put their money into gold. This is because gold in general, like I said, is universal. So if a country essentially crashes or is in war, then you don't need to rely on that country's currency anymore. You can rely on something like gold. But the other thing that could raise the price of gold is all linked to the Federal Reserve and our current economy. Our economy in the United States is pretty fragile right now as we recover from the pandemic. We basically have rising inflation, so prices rising all throughout the country for just about everything. In the same breath, though, we also have the Federal Reserve discussing how it's going to bring demand down so we can lower inflation in our economy. They've talked a lot about raising their interest rates in 2022, 2023, and 2024. So basically what that would do is make it a lot harder for people to get money. We would have less money circulating in our economy, and that would help inflation because less people can buy less things. But the Federal Reserve has also talked a lot about what is really causing our inflation problems. And one of the key things that's causing inflation right now is our supply chain issues. We're having supply chain issues because of what happened in 2020 and because of all of the money that has been poured into our economy. Like I said, when the pandemic started, nobody really knew how long it was going to last for, and we couldn't just have businesses and people making no money for several months out of the year. That's when the Federal Reserve decided to step in and print trillions of dollars in economic stimulus. This was all in the form of direct stimulus payments to Americans. So some Americans ended up getting thousands of additional dollars even though they weren't working. We also had extended unemployment benefits. So on top of state benefits, you would also get some extra money from the federal government. We also had things like the Paycheck Protection Program, which was for businesses who did not fire people during the pandemic. If they held on to a lot of their employees, they were going to get a government subsidy for keeping their workers. But not only that, the federal government decided that we needed a mortgage moratorium program, which meant that people who were renting or had a mortgage didn't need to make any payments on their mortgage for an extended period of time. And finally, we had paused federal student loans, and they are still paused until May 1st, 2022. So Americans were saving a ton of money, and they were getting a ton of money from the government. That in itself created an influx of purchasing all throughout our country. We saw record spending in just about every market you can think of because people were saving so much money. There was so much money available. Opportunity was great. But suppliers just simply couldn't keep up. So eventually they started to run out of everything, and that has led us to our massive supply chain issues that we're facing today. Not only that though, but we also have things like the Great Resignation and a labor shortage within our country. People are quitting their jobs by the millions right now, and this is all completely voluntary. For one, that's because of inflation. People who are working for minimum wage or just above minimum wage are realizing that they can't work 40 hours a week and put food on the table. So why would they want to continue working at that job in the first place? People are quitting their jobs because they're being mistreated by their employers, and they have been throughout the pandemic and even before then. And finally, people are quitting their jobs because the pandemic made them really realize that they want to work for a passion and not just a paycheck. They want a career that they're happy about in something that they love and not just a job anymore. But with nobody working and nobody able to create things and make things for these businesses, then that means that businesses are running out of supply, and that is making the price of everything go up. Now, while the Federal Reserve can do some things in order to decrease demand within our country, there's not really much they can do about our supply chain issues. Our supply chain is controlled by private industries, and private industries can do whatever they want. Sure, there are some rules and regulations that they have to follow, but as far as major wages go, they can pay their employees whatever they want as long as it's above the state or federal minimum wage. In addition, if they want to fire people, they can do that. So businesses basically have all control here. They also have control over everything that they make. So if they want to make less or more of something, they have control over that. Now, no business right now is saying they want to make less of a certain product, but they simply can't find people in order to make more. That is driving up the price of just about everything, which is a big problem because we also have the Federal Reserve that is tightening things in our economy, which has led many experts to believe that the United States is entering a period called stagflation. Stagflation is basically when you have inflation steadily rising in your country, but your economy is actually shrinking. And the economy is shrinking because people are buying less. Inflation is so high, so people buy less. Economic stimulus is ending, so people buy less. And then the Federal Reserve is raising rates, so people can't get loans. They're spending less money. In the same breath, though, inflation is still high because there are still some people in the country that are going out and buying things at record rates. But not only that, supply chains just haven't caught up yet, and they still can't find people to fill a lot of these positions. So even though the Federal Reserve is strengthening its policies and getting more aggressive about inflation, people are still going to be paying more for the same things. Now, all of that goes into the devaluing of our dollar. And it's one point that these experts are making about why gold is going to reach a new record high this year. Investors are going to want to put their money into something that is going to protect them because the United States could enter a recession caused by stagflation. And there really is no direct answer here because even if employers start raising wages, Well, that means that they will probably start finding more people to fill those positions. However, they're also going to be paying them more. And that means that these employees can go out and buy more. And that is going to contribute to inflation as well. At the same time, though, the Federal Reserve can't do anything here, because if they do nothing, then inflation will continue to rise, because everyone has access to really easy money. You can go out and get a mortgage right now and hundreds of thousands of dollars over the lifetime of your loan, versus if rates are raised, then you probably won't be able to afford that mortgage anymore. Same with car loans and personal loans. When your economy starts crashing, gold becomes a very sought after asset. Now, what could that ultimately mean for our economy and the market in general? Well, gold has been losing a lot of its market share as far as a commodity goes to Bitcoin for a long time now. A lot of people consider Bitcoin to be a commodity. I personally think Bitcoin is kind of a mix between a currency and a commodity because it is so technologically advanced. Gold's not really that advanced, it's just gold. But if we start to see a lot more people interested in gold versus Bitcoin or other commodities, and that means gold could start taking back some of its market share. Some experts and firms like Goldman Sachs believe that Bitcoin is going to hold 50% of the commodities market by 2025. Gold could take back some ground though, because Bitcoin is highly volatile. I mean, we've seen the price of Bitcoin hit an all-time record of around 65,000 in 2020 and then tank to 30,000 and 40,000 just a few weeks later. And while gold has definitely lost value from its high, it's not as drastic of a change versus Bitcoin or other cryptocurrencies. Some investors see it as a little bit more of a stable investment, and it's definitely a traditional investment versus Bitcoin. However, there is a lot of pros and cons to holding gold. For instance, gold is physical, which means you have to have a physical location to store your gold. Even if you just have a certificate that shows how much gold you actually have, well, that gold has to exist somewhere. And if you want to trade it, that gold has to go somewhere. It can be very difficult to take that gold and move it across the world, especially during a time of recession. You also can't just go out and spend gold. I mean, if you walk into a store with an ounce of gold and try to buy your groceries, they're gonna look at you like you're crazy. You have to have US dollars or some type of credit card. You can exchange your gold and then use that cash to buy groceries, but you can't just use gold to make purchases. That is where Bitcoin actually beats gold, because if that retailer or location or store or whatever it is accepts Bitcoin, then you can use your Bitcoin to buy groceries or anything else that you want. That's why Bitcoin is both a commodity, because it's a store of value, and a currency because you can literally use it to buy things. Now, just to be clear here, if you start to see the value of gold rising throughout the United States, that does not necessarily mean that we are for sure going to have some kind of economic crash. What that means is that investors think we're going to have a crash, and they're investing based on that assumption. And honestly, nobody really knows what is going to happen in our economy in 2022. Nobody can predict the future. If we could, then there would be no point of this channel or news in general. Our supply chains are eventually going to improve. I don't know when that's going to happen, but eventually supply is going to meet demand. And if that happens at about the same time, and the Federal Reserve doesn't need to get that aggressive on inflation because it's naturally starting to go down, then things will eventually even out within our economy. We can finally get back to what is considered normal. And there is definitely a case to be made for that happening within our economy too. I mean, it's not all doom and gloom. What I'm basically saying here is that the conditions are pretty optimal for both situations to happen. But what you should ultimately take away from this is to do your own due diligence. Never just listen to a random guy on YouTube, and always make sure you're doing your research before investing or buying anything. What makes sense for me or for a lot of investors or for the gold market might not necessarily make sense for you. Investing in gold or Bitcoin might not make sense for you and your family, so invest accordingly. Because as we found out over the last 2 years, literally anything can happen. So the best thing that you can do is just be educated and up to date with everything going on in the business and financial world. But with all of that being said, I want to know what you think about the gold market in 2022. Do you think that gold is going to reach an all-time high this year because we're going to see some economic and stock market crashes? Or do you think that gold is actually going to lose value because our economy is going to return to normal? As always, whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I will see you all in the next one.